Hey, good morning. It's Tuesday, October the 22nd, 2024. I don't see any obvious daily driven or hourly driven trades on the E-mini S&P, so we're going to talk about the longer term picture today. This is the division spread of the 2 and the 10-year yield curve. And you can see that getting above zero, that means that the yield curve is no longer inverted. We normally look at this with the MACD to help us know when the curve is going to turn once the moving average, longer term moving average turns. Once that happens, we shift to the RSI to give us a shorter term view of how the momentum is handling this spread. We are now certainly above the zero level, and we are in an upside range shift. This is why we're looking at the weekly chart on the E-mini S&P futures contracts with these higher highs and these lower highs in momentum, expecting a downturn. We know that that yield curve, once it becomes uninverted, we have a threat of a downside move. What we're looking for on the weekly chart is a move like this, shown here on the RSI, which would help us think that we have a downturn coming, but we're expecting a larger turn down because of the curve uninversion. For the weekly downside to express, we need the daily to express to the downside. The last time this almost happened was back in late September, but it didn't express. We came down and found some supportive buying and went higher. What we need to see now for this downside to express, and maybe it won't, is for prices to get below this midpoint of the range, and in doing so create a downside shift in the RSI. Once we see that, then going back to this weekly chart, it is more likely that we see something like this occur. And this time, once that happens, a further downside shift may occur because of the yield curve becoming uninverted. Hope you have a good day.